This strategy, I'm not going to lie, is extremely boring. But guess what? It pays me premium, weekly, and monthly. Let me show you. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day today. Every single person that comments down below is going to get our option sellers cheat sheet. This is perfect if you're just getting started with the strategy you're going to learn today. Just drop a comment down below. I'll personally send you over that cheat sheet. And while you're down there, hit that like button and subscribe button. It really helps our channel grow. And if I provide any value for you, I guess that's the cost. Hit the like button. But in all seriousness, guys, we're going to do a little public portfolio audit today, show you guys all our open positions. But most importantly, those of you that are just getting into selling options and wanting to learn a very simple strategy for generating premiums from the stock market, I'm going to be showing you guys that as well. So first and foremost, we have 3 stocks that we are currently, quote unquote, trading. As you're going to see, this strategy, guys, it's boring. And that's just me being honest. Oftentimes we just, set our trade and then we forget it for the next week or 30 days. Okay. It's a very simple strategy. Just watch the whole video and it'll all make sense soon. But we have 3 stocks that we are currently trading: American Airlines, Fiverr, and Snapchat. So let's quickly chat about each of those and why I did those. So what I'm doing here is I'm essentially saying, where it says put, all I'm saying here is I'm willing to buy 100 shares of American Airlines on August 22nd if American Airlines is trading at $11. Okay. Now I have 2 contracts for this and I was paid $21.32 for each of those. Okay. And we could see that if I go to I try to be as transparent as humanly possible without giving all my personal information away, guys. But you guys will see that I collect that premium right here. You see, I sold opening transaction put American Airlines for August 22nd, $11, and I did 2 contracts, each of which I was given $21.32. Okay, that's what that is. Now, going over to our trading log right here, there's my email. Feel free to email me. But if in all seriousness, this is our trading log here so far. So what am I doing here? Well, I'm basically saying on these 3 companies that, hey, American Airlines, on August 22nd at close, if American Airlines trading at $11, I'm cool buying 100 shares. That's all I'm saying. Fiverr right here, September 19th, 20 puts. If Fiverr at close on September 19th is trading at $20, I'm buying 100 shares. And then Snapchat, $7.50 puts, August 22nd, also expiration. All that says is I am going to buy 100 shares of Snapchat on August 22nd at close if Snapchat is at $7.50 or below. So obviously, I'm collecting premium through this as well, but what's the risk? And you can see this is my total premium here on those 3 trades, totaling about $114.29. That's my total premium, and this is my return on those. That is my ROI on collateral. Obviously, results vary. You will not collect the same premiums as me. They just are constantly changing when the market's open and depending on the setups, which we'll talk about here in a second, right? So basically, the way I calculate this a return on collateral, which is my ultimate number, is all I'm taking is my premium that I'm collecting. Like, for example, on the American Airlines, I had 2 contracts. I'm taking my premium and dividing it by the amount of money I'm getting tied up till that expiration date on this 22nd, right? Because your brokerage isn't just going to be like, okay, Pete, you can buy 200 shares of American Airlines, right? But you don't got the money for it? No, they're going to lock up your collateral, right? And 1 contract equals 100 shares, just FYI. That's why you see when I say contract, that just means 100 shares. Listen, I don't make the rules. This is just the way the universe works, okay? And so if I do 2 contracts, that means 200 shares, 3 contracts, 300 shares. We got it, baby. Listen, this is a simple strategy. I need it for the simple like me, right? But in all seriousness, guys, that's all I'm doing to capture that return here. And that's my premium. Now, let's take a look at some of these setups and kind of like how I kind of think through things, right? So first one here is American Airlines. And I opened this up when I saw this drop a bit. All right, let me refresh this since market is open now. We can see it's trading at 1160, down 1% today already, which is fine. But I opened up this cash secured put when we had this fairly large drop, okay? Now, this isn't called an indicator, this overlay. It's called the Bollinger Bands. Now, listen, indicators, it's all BS. Don't let anybody tell you they know what a stock's going to do. No indicator knows, but it helps us collect the most amount of premium, right? Because, right, if you try to go and sell, right, an 11 put, right? Saying when it was trading here at like $12, you'll collect like, if anything, you'll collect like $1 in premium, right? Because it's already at the top. You want to sell your cash secured puts, which I'm showing you, when the stock is trading down. So when I saw this big drop off for American Airlines here, I was like, you know what? I'll jump into the 11 puts. The best time to collect the maximum amount of premium is when it's at the bottom of its Bollinger Band. So you can see right here, it was trading at 1036. Okay, now if I could have gotten away and probably got good premium looking at the 10 puts. So not only am I getting more premium, but I'm also, right, getting a better strike price. This is a fantastic way, if the lights are starting to connect, to dollar cost average into stocks at better prices and collect a premium upfront just for saying maybe. Now, there are a few scenarios in here and that can happen to you, okay? First and foremost, right? Let's say August 22nd comes around and American Airlines is trading at $11 or below. Let's say it's trading at 10 at close. Well, I am buying my 100 shares or 200 shares in this specific case for $11. So my cash that got wrapped up, the $2,200 in collateral here that got wrapped up, it's not going to be returned back to me. My brokerage is going to use that money to go buy the 200 shares. Feel me? Right? And then I have the shares now. Okay. That's fantastic. I like that. I want to get the shares because then I could do something called covered calls. All right, I'll talk about that here in a second, right? The second thing that can happen though, and this is usually what happens if you follow along with some of the technicals and the delta and stuff that we talk about. Honestly, better yet, just click the first link in the description. I cover all that. I call this the Ark Options Strategy. You can get this literally all set up within a week for yourself, educate yourself about it, and start collecting these premiums. Click the first link down below. But with that said, the second thing that can happen here is that, let's say at close on the 22nd, American Airlines is trading at $12. Well, my contract expires worthless, which could be a good thing in your case or my case, depending on what your strategy is, right? But my money, my collateral is now returned back to me, right? It's given back to me, and then I can go run the play again on a different opportunity. I can do that, right? Fantastic, right? So there's two situations and two kind of buckets that you'll start putting yourself in, right? Because you have the group, and I'm sure you guys, somebody in the comments, comment what you like. Do you like getting assigned, or are you terrified of getting assigned? Because you're going to have two buckets of individuals, right? You have the individual that's terrified of getting assigned, and getting assigned means your money actually being used to buy the shares. And a lot of people, they just want to collect that premium. Like, that's it. They just want to walk away with this premium that they're getting and then moving on. I personally like to do this on dividend paying stocks as well, because what I'm getting there is I'm also getting a dividend, plus I'm collecting these premiums. Now, you can do this strategy on a weekly or monthly basis. Let me show you. So I'm just going to use Robinhood for example, because I know a lot of you like to use Robinhood. It's a lot easier. For example, we'll just use Snapchat. So if I go sell a put, I can go out just 7 days on Snapchat right here. Now, the premiums aren't going to be that crazy, but it's now on a weekly basis, right? So for example, here, I'm only collecting $5 and I'm wrapping up $700 for 7 days. If I go to my cash secure put calculator, all this stuff is completely free, guys. All this, it's in our Facebook group. Join us. A link will be down below in the description. I'm locking up $700 for that, and I'm collecting just about a 0.71% return in a 7-day period. Obviously, this is what I'm saying at the time of recording. Results will vary, not financial advice, right? Now, why do people do this, right? Why do people do this strategy? Why do people do weeklies, right? Well, you would do weeklies because, let's just say for the sake of this example, you're able to do this 4 times, right, in a month, right? Let's say you're able to do this 4 times in a month. Well, you would collect $20 total, okay? Now, that's not always the case. Sometimes you're going to get assigned. This is the stock market. Nobody knows what's going to happen. Occasionally, you're going to get assigned. Sometimes you're not going to get assigned. Maybe you close out early, right? You can really go deep in this, right? Like, it's a very simple strategy, and there's nothing wrong with just letting everything go to your expiration dates. But it's like anything. You could kind of just dive in and micromanage this a bit more. And there's 2 buckets, and both of those are okay. And as you grow in this, you'll see this doesn't take more than 15 minutes a week. Honestly, like I can't show. It really depends on your portfolio size, but it really doesn't take a lot of time. Again, click that first link in the description. You'll learn more about Ark Options, because we combine 5 sources of premium into one simple strategy that you can take a look at. But with that said, we're collecting $20. Now, if I go out a month now, let's say I go out 28 days just at a month, and I do the sevens. I'm collecting $17. Okay, so go back to my calculator. I'm collecting $17 and I get a 2.43% return. But take a look at this. I'm getting more if I do the weeklies. Now, on this small scale, that is substantial. Okay, that is substantial. Now you're getting $3 extra. Let's just call it 5 for simplicity. You're getting almost an entire week's of premium, right, on your collateral by taking on the risk of doing the weeklies, right? Because there's more risk involved with the weeklies. Running weeklies with this strategy is definitely, I would say, a little bit more of an advanced topic, right? I personally, as a beginner, always like to do monthlies, right? And let things go to expiration, right? So in this case, it's 28 days. Right, we wrap up our $700 for 28 days, right, and we collect $17 in premium. That's exactly what I did here. My Snapchat here is actually a 750s, right? I collected $17.32, and I wrapped up $750 for a 2.31% return. And now I'm kind of just waiting. I'm not doing anything. Literally, guys, I'm not doing it. You guys, this is, what do you think I'm doing? There's nothing for me to do now. Right? There are times where there are things for you to do, okay? Because let's say these continue to show up. You could see that I'm positive on American Airlines and Fiverr. And Snapchat, I'm still in the negative here a bit. Now, this is a very debated topic. Like, what does that mean in the negative, right? If I wanted to buy it anyway, am I really in the negative? If I really wanted to buy Snapchat at $750 on August 22nd, am I really in the negative? This is just referring to the amount of premium it would essentially cost me, or premium that I have locked in already, right? So you can always close these out early if you want to. Like, for example, let's just say that with this Snapchat or American Airlines, I can give back $10 of this $42 today, right? And I can close out my position. My money will be returned back to me that I can run the other play. I don't normally do this unless I capture about 90% of that full premium. I don't want to give back any of this premium because I always, depending on what your targets are, my personal targets are around this, where I'm at right now on this public portfolio. That's what I like to be around on a monthly basis. So I'm hitting my target. I'm not going, like for this one, there's not much wiggle room for me, right? I didn't get an insane ROI on my collateral, so I'm not going to close out my American Airlines early, right? However, Fiverr here, right? I collected $54.33. I got a 2.72% return on this. This one I might consider closing out early and give like $5-10 back of this $54. Right now, you are giving this up front. You'd pay a little bit back of it. That's the way I like to think of it in my head. And I would close this one out early as long as I stay within my return on collateral. Guys, if you want to learn more about this, whether you're brand new or just getting into this, but you want to learn how you can set up and launch your own option selling portfolio in the next 7 days without staring at charts, without creating a full-time job for yourself, without being a day trader, and most importantly, without taking away from your work, your family, your faith, your lifestyle, and this is built for real life. Click the first link in the description of today's video and you're going to learn more about that, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.